Now, following yesterday's late rally, today saw a return to the recent downward trends for the U.S. equity markets. This as the Dow Jones dropped by more than 500 points intraday, led by growing concerns of a deepening Eurozone debt crisis. But first, we look at today's economic reports, that of which saw U.S. wholesale inventories come in short of expectations by only rising a total of 0.6%. Meanwhile, in the United Kingdom, the Bank of England downgraded its growth forecast for the year 2011 on a slower than expected global economic recovery. Meanwhile, concerns are continuing to rise that the Eurozone debt crisis is indeed deepening and spreading to other larger nations, this time on growing speculation that France is the next online to lose its AAA credit rating. This in turn led the way for a rush by investors to safer haven assets, that of which included gold prices, which once again touched a new high as gold futures for December delivery traded above the pivotal $1,800 an ounce mark. And of the 6.3 billion shares trading today at the New York Stock Exchange, roughly 82% of them were in the red. Now, taking a look to see how the Dow Jones has closed out this Wednesday's trading session, it once again on the downside, down a total of 519.83 points to settle in at 10,719.94. Now, in a breakdown of today's major market movers, we first begin with shares of Bank of America taking a more than 7.5% hit, this after agreeing to sell part of its mortgage portfolio to Fannie Mae in an attempt for the company to shed some assets. Meanwhile, shares of HSBC also on the downside, more than 7%, this after selling its U.S. card and retail services to Capital One Financial for roughly $2.6 billion.